The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here Monday through Friday, 11 o'clock till noon. And this is the Tiger Technicians Hour, 877-927-6648. And thank you to all the hosts. Great programming. Hopefully we can keep that standard up. And I should mention also I did Larry's show, Larry at 9 o'clock, Trade What You See. So I did quite an in-depth bit of work on certain areas. Well, let's look at the market. Dow's up 28 at 17,856. The S&P is up 5 at 2,095. The comp index is up 17, up a little more, 0.36%, rather than 0.24 on the S&P and 0.16 on the Dow. So there's some more strength in the NASDAQ area, so that's at 49.19. The VIX index is at 1343. Now, I'll talk about what I'm expecting and what we've got to look for after Yellen has an interview. You've got to remember, I don't believe that this is, first of all, I don't remember ever on a long weekend like this, right up until the last hour. This is what you expect from your state government, where here in Beacon Hill in Massachusetts, Friday night at midnight, they pass these things without anybody even knowing on a Friday night. That's very different to the Fed. So I think it's more an interview. I don't think she's going to reiterate that they're looking at interest rate, a pop in the interest rate, maybe just a tad, let's say, for June, whatever it is. I don't think they're going to be surprises. That's kind of what the market's saying. Now, if there is a surprise, let me do it right now. So the E-mini that you're looking at right now, 250, if it breaks above 2105.25 in the next 2 days, that is extremely positive. That's leg B in the weekly chart. And all I can say is that we're going to have to call this the Trump rally. If, in fact, there's a reversal of fortune, and all of a sudden she says just one thing that the market perceives as negative to the market, there's a chance that we could pull back. I'm just going to make it real easy. 180 points up in the Dow, going into the 18,000s. We're looking at something very positive. On the downside, 180 points down, getting back to that 17,600 area. Well, it would be 17,700. I would say getting under 17,700 by Tuesday would suggest the chart pattern we've been looking at, which I'll go to in a moment, is going to be the one that we've got to consider still the template. So let's just make it sure we've gone to leg D in the 120-minute chart. I have to tell you, everything right now looks, at this moment, if the market stopped right now, it was 4 o'clock, I would say, you know what? There's a potential for a Chapman wave squash in the E-mini, and that takes you to at least the peak C, and then the stochastic, which is at 88%, starts to pull back. The MACD continues the momentum, so you get the torque from the stochastic, and you get the actual power move, because you see there was a divergence here, which I spoke about on Monday. I sometimes have to wonder if I've just not overthought the whole thing, because my thinking was that we were short. We got the short exactly right. We could have switched to the long side in the Dow itself on Monday, even Tuesday, and I decided we would stay with the short. We still short a position 1-to-1 short the Dow. Hasn't been taken out. Could be taken out by today. But my thinking is that I've got to go with the chart pattern until it changes. So what I'm looking at here is this weekly chart. This is really good action. Holding the 9-period exponential moving average at 2052. We're at 2091. We could even have a pullback, which I would love to see into next week, maybe 4 days, 3 days, a pullback, create some kind of bottoming formation, see the financials start to move forward, see some of the sectors that have been lagging start to kick in, and that to me would be very exciting. I'll talk about all the other things as we move along here. So let's just do this step by step. So leg D in the 120-minute chart with the technicals, actually the technicals are very strange. The MACD's dropped sharply, which says you can rally to the upside, but it's probably going to be limited unless at 2095 you immediately by 1:45, 2 o'clock, the E-minis are trading at 2097, nicely higher, maybe 6 points or more higher. That will say, oh, now that MACD can start to move higher. But in the meantime, back at the range, it looks to me like a little period of rest is really not a bad thing. Now let's get rid of this, and I want to go through. We'll do this step by step because at 2 o'clock, I'm going to give my subscribers an update. I'm not sure we're going to do anything. I don't know yet. I'm going to prepare for every contingency. We are long, we are short. We have a mixed portfolio, and I think that's great. The shorts are working. The longs seem to be working. I'm not fighting anything. It's just what we're going to add. So let me go through this one at a time. INDU, the Dow. Let's see. Well, I've got enough time. 2 minutes. Here we go. The Dow's up 20. It made a peak B yesterday. This is called the gray B because it's underneath the left side cliff, the Grand Canyon cliffs. It means that it's retracing towards that level again. It's just an explanation. A retracement failure mode means that at any point here you could expect that it's possible to have a failure. That's very different to if it's a leg B at a new recovery high above the 18,167 high of the 20th. That would say, it's not a retracement. This is a buy mode. But we haven't got that yet. Technically, the stochastic's only at 73% and the MACD is just crossing positive. So there's room for a consolidation down to the mid-17,700s. If, on the other hand, by the end of the day, the Dow is at 18,000 or very close to 17,950, is 100 points up from here, I have to say that's going to be very positive, and that maintains the W formation in the weekly chart. The weekly chart pulled back just a little lower at the 17,331 to it's keeping this pattern, consolidation pattern active. Now, the reason why I'm staying with that short position is we're right here matching. Where's my my daily newsletter? Right here. We are matching this rally from there's the May high of last year. We're matching that bounce just above the trend line, that channel line, and we'll see if we break down here. It's the same thing that happened right there in November, from the November high, right in December, I think 29th or so, and then it broke down. This match is exact, except for one little thing. The third time sometimes is an amalgam of the two, and my thinking here is that even if we do pull back, I think that the 17,300, 17,200 is going to be major support if there is a very sharp slide. That's 600 points down, 600 points down. I think that would set many things up. That's much my thinking for now. A breakout, you go to 18,000 and I have to say, change of pattern. Okay? So now let's just continue. We get rid of this and we go straight to the S&P. All right, here we go. S&P, SPX.X is trading also. Oops, that's wrong. And that extended a little higher. That's gone to a leg B. That's also gone to a leg B. No, I'm sorry, this is a B. This is a leg C. Oh, it's already at a C. So, there's the break. Let me just run the numbers. Gold is down, was down. Let's see with gold. Gold just disappeared. Gold is down 8 at 12.14. The dollar is up nicely. Crude oil is down. And bonds are down a half a point. I'll be right back. Basil Chapman, Tiger Conditions Hour, Dow's of 18. Right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Since it's Technical Friday, and I'm doing my webinar coming up a week from Thursday. This is the webinar right here, front page of TFN. You'll see you go to the opening call, subscribe event only, the consequences of a new market high. Basil Chapman will be hosting a 90-minute live webinar with subscribers to his opening call newsletter on June the 2nd. Sign up now for a 30-day free trial. To access this exclusive event, just go right here. And I have to tell you, I've spent a lot of time in the mental aspect of going through all these different things that are, to me, are absolutely important. The size of cruise ships, the size of engines, of automobile engines, what's happening to the 0 to 60 speed that almost goes in parallel with the stock market. Is it possible that we've made a major top at this point from May of last year? I just don't think so. This is if it's a top, it's going to be a really serious top. I'm talking about a top of consequence. And I don't see that yet. I still need to see a Trump rally. I need to see the whole thing with, I'll be talking about that at my webinar Thursday night. I'll be talking about Bernie Sanders. I'll be talking about our Senator here, Elizabeth Warren. I'm going to be talking about Hillary Clinton, talking about Donald Trump, how that fits into the socio-political aspect that we're in right now. What about deflation? The Fed wants inflation. They've tried the downwards, and look, gold has been pulling back. I mean, the best arbiter of a trend is price, and gold should have been soaring. If you really want inflation, I think you'd see it in gold. You're getting inflation in other areas. Believe me, you're getting it, but it's not really the way the Fed measures it. Talking about rents all around the country, I'm hearing. I thought it was just in the Northeast and some other select places, but I'm hearing it from everywhere. The way I'm looking at it, I think there still needs to be new all-time highs. And what's the consequence? What's the consequence if you go to new all-time highs? What's the consequence for the S&P? Starting leg 5 in Elliott wave. In the Chapman wave, it's even more important because it will start a new wave that says the monthly chart has gone to a buy mode. Buy modes don't break down and fail. They usually succeed. And that would be the same thing with the Dow. Dow over 18,351, S&P over 2134. We're looking at something different. Even if it creates a short-term double top, it's still very important. I'm going to be talking about all these aspects. It's not just talking about it as a theoretical aspect. We want to be putting on trades. What we're looking at, we've got a couple of trades that we put on that are the more intermediate term ones. Dividend stocks. We've got a great dividend stock that's been working for us since December. We've got shorts, we've got longs. I think this is just a really important period. Let me show you something here. The DXY, the dollar, look at that move. Now, is this saying, of course, anything can happen between now and the close, but the candle as we're looking at, why would they be pushing the dollar up 42 cents to 95.58 to try to retest the recent high of 95.66? My thinking here is that the 200 period exponential moving average is becoming even more important. And if it's you're at 95.87 on that 200 period moving average, a close into the 96s on Tuesday or Wednesday is going to suggest two things. It's going to suggest that the dollar is in play, and it's in play for a little while. It's going to be that monthly chart that I'm looking at, because once we get into this candle, this ugly candle in the weekly chart from the 1st of April, where you open up at about 96 in the 96, 20, 40 area, and you plunge down to 94.32 and then continue down after that, down to the 91, 92 low. There's a V-shaped recovery here with the MACD starting to improve, the stochastics improving. So it'll fail completely if the dollar by the end of there or early next week, the dollar's at 94.50, having failed completely down a point. As gold, and let's go to gold, and gold, which I still think is in a retracement area, a very well-deserved retracement after a spectacular move from the 1050 area up to the over 1300. You know, we're talking, that's a lot of points. And as far as I'm concerned, what we're looking at here is gold monthly chart is still looking pretty good, but I think that this is a well-deserved break. And what is that saying? After all, let's put it together with the TLT. The contention here for me is that the Dow down 180 points, the VIX index up in the high 15s, going to the 16s, bonds, excuse me, bonds rallying while the, bonds dropping as yields go higher. That's starting to say, negative scenario. Whereas if bonds are, I said it wrong. Bonds are dropping. Yes, bonds are dropping and yields are going high. And in fact, if yields are going lower and the market, in fact, is pulling back, you will see the VIX index start to pull back into the 12s, which would be really positive. So what we look at are really important in terms of trends. And I'm just going to make it real simple. The volatility index, the VIX, going up into the, let's put it this way, going to the high 15s and then starting to trade in the 16s next week is a real problem. And then we've got this matched with the chart pattern here that we're looking at right there. And that says the 20-period moving average at the 17,680s is next. You go under that and you'll have to say, okay, you got to stay short until we don't match this particular pattern. You definitely don't want to drop below 17,250, because then all of a sudden you get into that aspect, whoa, we could have that very strong cascade as we saw in January of this past year and August of last year. I just don't think that's going to happen. Now, let's just put this together with some other things. So this is Technical Friday. I want to jump around a little bit if you don't mind. The TLT is just saying, hey, at this point, bonds are just stuck in a range. There's nothing going on at this point. But I can just tell you that if the TLT starts to rally over 131, it's at 130 right now, 131.20, then there's a real good chance you're going to retest that 132.32 high that was made on the 13th of May. Whereas if the TLT suddenly, by the end of the day into Tuesday, Wednesday, starts to decline and it breaks under 128.90, there's a good chance you will test 128.91. What do I think right now? I think the Japanization of our bond yields still remains in effect at this particular point. These little quarter-point bumps are not doing anything much, and that's the way I'm looking at it for now. So if you look at the EUR USD, I want to go to the indices in a moment. Just let me finish this. Made a new low today, a leg F to the downside. At this particular point, it's saying we're favoring the dollar and unfavoring the euro dollar. And of course, the dollar is made up of euros as well. But this is the pattern we're looking at. And the USD JPY, Japanese yen, Japanese yen is just stuck in this range. If it at 109.89, if it breaks over 110.58, well 59 by Tuesday or Wednesday, it's going to go higher and probably go higher with the dollar, I think. So I'm just trying to make it as clear as possible. VIX in the 13s to 12s, buying pressure. VIX in the high 15s to 16s, selling pressure. Just don't make it complicated. Okay. Now, if you look at the FXY, that's suggesting that we've made a peak E top in the weekly chart. I can't call it a top just yet. The MACD hasn't yet turned down. I have to wait for the close today. But so far, it hasn't closed under the 9-period moving average this week. It's close. It's under it now, but we haven't closed. So I'm looking at the FXY, which is the currency shares Japanese yen. I'll be right back. Dow's up 28. Basil Chapman, Tiger Technicians Hour. And hold on, we've got a lot to talk about.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back, and the Dow's up 35, S&P's up 6. It actually has been a slow creep to the upside by the S&P. kind of impressive, I must say. All right, so yeah, let's just do a couple of things. I got a good email that said the dollar not as strong as November, December 15 rally. So far, you have Fed dance, jawboning, and if the dollar rallies like December 15, could get another sell-off similar to 15. Bloomberg says less than 50% chance of move in June 16. So yeah, the way it's looking right now, the way, I mean, bonds, why, I don't know, bonds are almost unchanged. It's just, you'd expect something different, but the day is young, and I think it will be just a chatty thing. So the FXY, which is the Japanese yen currency shares, weekly chart has got this cup formation, and it went to a left side, right side price time match 1 week early. It went to 91.35, and it didn't take out the high that was made of 92.57 back in the week of the 17th of October of 2014. But cup formations are really powerful. You have to respect when a left side high hasn't been taken out and there's a pullback, that if you go 1/3 to a half below the lip, previous lip, to the cup low, in this case, the cup low of week of the 5th of June, at 2015 at 77.19, you could come all the way back. I think that what's happening here is that we're holding steady. But the monthly chart is, in fact, as is said in the Denbayab, that it's holding well. I think there is an improvement, but I just think there's a choppiness here, and you'll need a sudden spike. And that spike, either to the upside, has to take it to about 90 to fill the gap, or underneath towards the 86. So if you've got 86, 90, that's 1.5 points up, but let's call it 1.5 points down. Either way, the trend, if it's down, says you're going to test the 86.50 or lower level, and on the upside says you can fill the gap and we're heading towards the 91.50 area. I just think this is a very important rest period, and it kind of fits in with my dollar TRCCI commodity chart. You see the commodity chart is holding very well in the week, in the daily. It's making a potential head and shoulders top here, unless at 410.73 up $1.72, it takes out the high that was made peak F top at 413.76 that was made on the 17th of May. Takes that out. You have to respect it, because if it's not this week but next week, that becomes a leg E. But so far, you're held way above the 9-period moving average. The MACD is good, stochastic is good. I think the commodities are just consolidating the recent big gains. My thinking here is that you're more likely to see there could be a nothing, so that by the end of the day, the market is just maybe slightly higher or slightly lower, just almost an unchanged thing. And Monday, Tuesday, you start to see some kind of a test of the upside. But if there's a slide to the downside, if there isn't a direct hit in the next, between this afternoon and Tuesday morning, if there isn't a very sharp minus 60 to minus 80 down move in the Dow, minus 10 in the S&P, I'd be looking at this and saying, you know what? I think that we've got good support and that we could be going higher. And at this particular point, if you look at the XLF, look at the XLF. That is the S&P Select Financials. It's had an inside day. It's up 8 cents. It's made a peak D. It's just exactly like the market. It is on the cusp of saying, I'm going to have a digestive phase after a very nice move up. And that will occur if at 23.73 right now, up 8 cents. By Tuesday to Wednesday, I'm taking out 23.30 support. I could have a bit of a digestive move that takes me down to the low 23s. But the weekly MACD and stochastic are still holding extremely well, and I think we are actually long. We have a position in the XLF. I like it. It's looking good, and all I can say is that if you're looking at all the little ducks and you have to have them sitting in order before you can really get a major move, I'm not sure you'll get all your little ducks in order. I think this is it's been a rotational correction. If you're looking at earlier when I did an Irish show, we looked at the XLV. Comment was made, how come these things have held up so well? Look at the XLV, up 47 cents, 71.33, holding very nicely, holding that 9-period exponential moving average in the weekly. The monthly is starting to improve a lot. Who would have thought that we could go all this way into almost mid-2016 after such a spectacular move, going all the way back from 2009. Look at this. 2009 at the low in March of 2009 at 2163. And look at that 9-period exponential moving average. Look at the way we had that Roman candle, huge, the biggest Roman candle I've ever seen, just about 77.40 to 56.63. And now we haven't broken below that midpoint and held underneath it. Instead, we are climbing the 9-period moving average, getting to the asymmetric triangle, a breakout or breakdown. So if the XLV at 7131, the S&P Healthcare Spider Fund, takes out 73.90 by the first or second week of June, that is really positive. Then you got your rectangle formation which says you should make your way up towards the 77.40 all-time high. And now look at this. You've got PPH, which is the Van Eck Vector Pharmaceutical ETF. Also spectacular move, sharp move down, Roman candle, and now it's trading at 58.95. Not quite as impressive as the XLV, but boy, a nice move up in the daily in leg C, and weekly chart is just consolidating. But this is a surprise. But when you look at Pfizer, Pfizer has had a huge leg E in the daily. The weekly chart has come back so strongly with that Chapman wave Roman candle being, we're into the top part of the halfway mark of the body. That's really important at 34.70 PFE at 34.70, up 27 cents today. This is is this E or an A, a brand new A? It's looking very good. Pfizer, and if you put Merck in with the mix, two big ones, the old time big ones, you've got a new gray leg C in the daily. The MACD has got a squash, which takes you from the torque of the stochastic to the momentum of the MACD to a C, and then there could be a bit of a pullback, but the MACD keeps you going, even if the stochastic at 91 pulls back some. I'm impressed. I'm impressed with the SMHs, which I kept saying we should go long, and I didn't go long. Oh, man, look at this. Another day up 38 cents. This is good action, and that says to me my bias, even though we have shorts and longs, we've been wanting to add to the long side and the short side, but I'm impressed. I just have to tell you that to have the market vector semiconductor ETF, the SMHs, break this trend line resistance in May in the monthly chart suggests very strongly that if there's a high above 58.99, and we had a high today of 56.76, if that's taken out in the next week, you've got yourself a gray leg C in the weekly chart, a monthly chart, that suggests really strongly that we're going to go to the all-time high of 60.13. And all-time high, did I just say all-time high? Let me just squeeze this closed. No, not even close to the all-time high. I thought it was a problem when I said that. The all-time high was 100.25. Remember, they brought the SOX index out, the SMH index out 2 months after it came out as an IPO. That was the all-time high. And it went from 100.20, had a little bit of a pullback down to $12.95 back in late 2008. I would say that is very interesting, and that the market vectors is going to be a big tell on what happens in this market. I'll be right back. Basil Chapman, Tiger Technicians Hour.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Let me just finish typing this. I'm always answering questions in the den. That's why when I get back here, I don't always remember where I was. ANET is a question. ANET is the Arista Networks. Is that what it is? Yeah, Networks, trading at 72.07. The question is, I've got a starter position. We looked at this the other day, and I said, yeah, get a starter position. Now it's holding well at 72.07, but it's made a peak C. In this market environment, just to be a little careful, I'll wait until early next week, but I would prefer to see maybe make it leg D above 72.82, let it pull back a little bit, and then I would consider it. The best would be close to between 70.50 and 69.20, but it is acting very well. I would even say if you wanted to add to your position now, even before the Fed, I would add a little bit. You got a starter position, I'd add another one to that so that you've really got a small position. That allows you to set it up. If it gets away from you, you're in it. You can add to the upside based on the weekly chart. But right now, I'd say, it's acting extremely well. But to add to a full position, making it a full position, I really have to wait a little bit longer. I want to see the next test of support. That's all. But you could be adding to your position, even though it could be a pullback of even 1.5 points over the next week if things go bad in the market. But it's really acting very well, yes. I want you to look at high-grade copper just to show you something. High-grade copper is holding okay, but it's not really looking great. If you're looking, you remember commodity index that I was looking at, TRCCI. That was suggesting that the weekly chart technicals are very strong, and the weekly and the monthly technicals have improved a lot. So it's saying to me that the commodity index has a base. It's trading at 410.79, had a high recently in the 414s, pulled 1% down, no big deal. But I'm looking at if there is a consolidation, the dollar moves somewhat higher from here. I don't think the dollar's going to break out at this point. I just think there's a chance that it'll move higher and that gold needs to complete this consolidation by 4 o'clock this afternoon. I could say, oops, maybe it's done with that consolidation, but I don't think so. I would see that the commodity index pulling back towards the 400. I would love to see it under 400. And then maybe between 401.50 and 398. It doesn't have to touch the 200-period moving average in this move. In fact, I prefer if it didn't. Just a consolidation, time more than price. Okay, Now, I needed to do a couple of things. So I had a question here about the FXI, and I think this is a good time to be looking at some of the foreign markets. So the FXI is in leg B in the daily. It's really not a great chart. And if you look at the monthly chart, not good at all. But the weekly chart is showing an improvement. But it'll only show the improvement if the FXI, which is the iShares China Large Cap ETF, if it's able by Wednesday of next week, if there's any digestion, maybe later today or Tuesday, by Wednesday afternoon, Thursday of next week, shortened week, remember, this thing has to be trading in the 33.20s. It's got another 60 cents up to go. It really needs it. It just needs it, because if that's the case, all of a sudden that monthly chart has 34.66 as a 9-period moving average upside target if it's able to get somewhere into the 33s, mid 33s. I hope that helps you. And it's absolutely negative if by Tuesday afternoon, Wednesday morning, it's trading under 32.20. 32 to 32.20. It's really a cushion. It must hold. Okay. Next question is, so this is something I'm not sure that I get everything in the question. GPB USD, we looked at that earlier on when I did Larry's show. That's in a retracement mode. The weekly chart's improving. And now then the question is always in a statement. Highest dollar SKEW. I don't know what that stands for. Skew. I should know it, and I've probably heard it before, but I'm blanking out. Ever on the put options before Brexit chart. Yeah, I see this Brexit is going to be a big deal. I don't even know how to answer that. It's out of my milieu. I don't. It's just nothing that I read about, but I just don't. I have an opinion that I probably will discuss in my webinar this coming Thursday evening for subscribers. It has to do with international markets, etc. But this is beyond me. I don't even touch it. Tesla NDX wave count. All right, yeah, Tesla. This is very interesting. So TSLA trading at 221. This is leg A, B, C. This is leg C in the daily. A lousy weekly chart, and the monthly chart is just stuck in between here and nowhere. I can just give you, all I can say is Tesla. The parameters I'd look for, if Tesla is able to break and close on a weekly basis in the next 3 weeks, I'll give it 3 weeks. If it's able to close above 230, it's at 221 right now, down 3. If it's able to close above 234.50, somewhere in the 233 or higher area in the next 2 weeks or so, this is a close, a weekly close, rather than breaking below the recent low of 204.02, that would be positive. If it takes out 204.02, I think it's a real problem. Now, this is a problem for me as well, because if my estimation that we need to go into a CODA mega move to the upside in the markets to really culminate the whole thing, I would expect that stocks like Tesla would just be soaring. People would be buying them. It's like pocket change. I made my money like in 2000 between 9.15 and 9.30. Let me go out and buy a Tesla. That's kind of what we'll be seeing. We'll be seeing houses selling for, the ones that are selling for the 1 million will be in the 2 million, one at the 3 million will be in the 6 million. That's the way it's going to go. And it's in a very brief period that acceleration takes place. I still think that's a big, big possibility. And Tesla, but right now, Tesla as a stock, as a chart, it's just stuck. It is absolutely stuck. So how does that fit in with the NDX? Let me see if I've updated my NDX chart. NDX, okay, there we go. Oh, leg B up, no, it's not a leg B up. Yes, it is a leg B up. No, it's not. 4282, 4284. Yes, it is. This is leg B up in the daily. This is leg A pulling back. It'll be leg B if it can go above 45.74. Why have I not got this notated? I must have done something recently because I lost them. So this is I'm not going to do it now. It's a waste of time. All I'm going to say is that this consolidation here has a little bit of the semblance of the Chapman wave stalk leg. It really isn't quite that. It's not, the Dow is way better at chart formation. And all I can say is that, I'm not going to push this chart. I'm going to say it's more like a rectangle chart and that there should be a move towards the all-time high, the recovery high of 47.39.75. Now, if you want to know something about this chart, look at this. I think this is the one I've got right here. I hope so. Let's just move these little guys out the way. We're done with you guys. Thank you very much. And now let's go to this guy here. There. Yeah, there it is. Index 100. Look at that chart. This is quite an exceptional chart. Maybe I'll talk about that when we get back because it's worth talking about. Look how it's held. Look at this is really a Chapman wave stalk leg formation. I'll do a little work on this and we'll be right back after these important messages.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Well, folks, we're back and we're looking at the Index 100. We're in a little further back, so now we've got the Chapman wave stalk leg formation. So we've got two. We've got one in the Dow and we've got one in the NDX. But what I wanted to show is that, this is not the comp index. Did you ask about the comp index? I'm sorry. No, you asked about the NDX. Okay, that's good. So I'm going to do this and I'll show you exactly what we're looking at. Now, I'm going to be sending charts out to my subscribers over the weekend. We're going to start the process going into next week, Thursday, when I do my webinar, really important webinar. Because by then we might even have broken to new highs or we could have broken down. But most importantly, what I'm looking at are questions coming in here. I don't know if I'll be able to get to it right now. I'm sorry. Well, I'll look at them over the weekend and then first thing Tuesday if I'm able to. But this is very important. You've got the Chapman Wave Roman candle right there in the index 100. The all-time high was 48.16. We've gone to 47.39 with a round trip down to 825. Do you realize that that is like 82%? It's an 82% correction from the 2000 high. I mean, people don't realize when you crash, it is just it is horrible. I mean, you don't get out of it if you're still long anything. And that's the reason why this is a very important phase that we're going into right now. And the phase suggests very strongly that we should start the neck. We should go above this level of 4739, tackle that 4816 area. It doesn't say when. It just says it should be within the next two or three candles at the latest. I'd even say next 2 candles at the latest. So that's what I'm looking at. And I wanted to do that as we're about to wrap up. I just want to do 2 things. One is I wanted to say that regardless of what the Fed does, what I'm looking at is that there are certain sectors, for instance, the IBB has been extraordinarily weak. I still have a target down in the 200 area. It's at 275. But there could be a further gain. We could spend a little time here having a counter-trend rally, which is the reason why we've taken our 111 plus 135 or something points out of this thing, which is almost half of what it is. And I'm prepared to go long or short. I'm not prepared to do anything right now. I want to see what's going on. Maybe later this afternoon when I do my update at 2 o'clock, I might do something. But at this particular point, this is a counter. This could be a nice counter trend move, so that in the rotation that I'm expecting to continue, we could see sectors that were absolutely, look at this, SLX. The silver. This is the Van Eck Vector Steel ETF. It had a spectacular move from 1530 to the 31 area, 30 area, 31. That's spectacular. That's a double. Now it's been consolidating. It's back down to 23. It's at 24.96 right now. So I want to see what's happening in the sectors over the weekend. That's what I'll be looking at. I will also be away. I'll do the very best I can to start getting charts out on Saturday, tonight and Saturday. I'll have them already. We want to be prepared next week for the candle close of May in all the different indices, the monthly candles, very important. And we want to prepare for the next move. And already I'm getting a very strong sense of what I think we can expect. We're also looking at what areas are the weakest, what areas have been spectacular and now could start to rotate to the downside as money comes out of them and goes into other sectors. So that's going to be very important. So it isn't just a theoretical exercise in where are we going and why. It is what do you do? How do you play it? Do I still want to remain, for instance, like college funds for children or grandchildren? I wouldn't be touching those. Those are long, and they've been long since 2010 and 11. And those don't, I still say, I'm expecting higher highs. And then we've got to be real careful at some point, really careful. And I've got a whole scenario that could play out or it might not play out, but I'm going to give it to you Thursday a week. So check in, and if you go to my site and you want to start my subscription, go right in. You just put in your password, and then you're set, and charts keep popping up all day. I'll be back on Tuesday. Have a wonderful weekend, and have a wonderful Memorial's Day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.